What's up, millennials? Today we're going to be taking a look at where Skillz is likely to go with ticker symbol SKLZ. And for that we're going to be using technical analysis, so let's jump right into it. But before we do get into the technical analysis, let's very briefly go over a few fundamental things. First of all, we can see that on kathysark.com that Cathie Wood, or ARK Invest, has been accumulating shares of Skillz over the last couple of months, especially when the price has been dropping for the last couple of, well, even weeks, I would suppose, since like March or so. We can also see that Skillz right now has the position number 23 in the ARK W ETF, which is the next generation ETF. And if you want to read the CEO's newsletter, or like a letter he wrote on the Seeking Alpha, of course, then you can also write that or read that. It's going to be somewhere in the description. Here he's going to share his thoughts about the current state of Skillz. When we hop into the graph, we can see that they changed their ticker symbol on December 17th, which is when the SPAC started trading as Skillz SKLZ. And we can see that right now we are actually back at that same level we have been trading at when it was still a SPAC. In the meantime, it of course has seen a massive run to the upside from about like December 17th to all the way February 5th, February 6th even. And we can see that that happened because of a few reasons, I would say. If we go into the price action, we can see first of all that especially the 13 daily exponential moving average, which is this blue line over here, has held up price action pretty well since December 17th until all the way to, I would say, February 18th, more or less, which is this candlestick over here where we saw a candlestick closure below that 13 daily exponential moving average. And that, according to me, was definitely a sign that we could have seen the top at that very moment. If we go to the RSI at that same time, we can actually see that before that, which was on February 5th already, we can see a nice little red signal on the RSI, meaning that the RSI has been above 80, which is usually in the overbought territory, and then usually it needs some time to cool off a little bit. And if we scroll back down to February 18th, we can see that around that time the RSI started trading below the exponential moving average on the RSI. So the RSI being this blue line, exponential moving average being this white line over here, and the RSI was actually trading below that EMA, that exponential moving average, which can definitely be a sign that you actually have seen the top in place. If we go to the stochastics for around that time, which was a little bit earlier than that 18th of February, but here we saw actually a beautiful signal on the Crown Trading stochastics, which is, by the way, not a public indicator, it's a private indicator if you have the course of Eric Crown's Crypto Cave. And this is a very useful indicator, I believe, and this is actually a beautiful signal it fired off on, I believe, like the 10th of February. What happened was that the fast reacting stochastic, which is this blue line over here, seemed to cross this purple line, and then it bounced up back to that same level, used it as perfect resistance, and that is usually a pretty good sign that you have a nice little reversal incoming, or at least some downside incoming. So that was actually a beautiful signal. And also, if we take a look at the MACD around that same time, around the 18th of February, we can see that that produced a nice little move to the downside, the MACD being this blue line over here, the orange line being the signal line. We see a bearish cross to the downside of the MACD versus the signal line, which can also be interpreted as a bearish signal. So that was happening around February, but what is happening right now, you might imagine, of course. Well, let's take a look. First of all, if we scroll into the price action, we can see that currently we are trading very close to an important support level, I would say, at about $17.80 more or less, or even a little bit higher, which was mainly created by this low over here all the way back in December, and also this low over here all the way back in the beginning of January this year, of course. Now we are trading at that same level just a few weeks, or just a week ago more or less, on the March 30th. We saw a move back to that same level of the levels we have been seeing before in December and January, and right now we seem to be still trading along that same level. But actually yesterday's candlestick did close below that level, so we could definitely see a little bit more of a downside move in the next coming trading days, I would imagine. Also, we can see that that actually happened on quite high volume compared to the rest of the, compared to the rest of the days. So here we can see these are the volume bars, so these great gray vertical bars, of course. And we can see that this day's price action had quite a lot of volume happening. So that usually, if we actually do see a break of the trend like we saw today or yesterday actually with a lot of volume, that could actually indicate we do see a breakout coming to the downside. So that's not a great signal in and of itself. If we look at the exponential moving averages, and especially the 8 daily exponential moving average, because we are of course on a daily chart, we can see that this yellow line, which is the 8 daily exponential moving average, very difficult to say, it seemed to held up price action pretty well, or actually seemed to be used as resistance pretty well along the last couple of weeks. Right here, it has stayed below that 8 daily exponential moving average, and here it used it perfectly as resistance. And if we go to the indicators, we can see that first of all, the RSI is still trending below the exponential moving average, but yeah, we are quite low on the RSI. Usually a move below 30 or even 20 is already considered to be quite an oversold territory. So we are already very close, or we are already actually at that 30 level, at that 30 RSI. So I would say that we are getting very close to being oversold at this time. Also, if we go to the stochastics, we can see that we are quite low instead, or indeed, but I would not say that this is just a buy signal just yet. If we go to the MACD, we can see that also the MACD is trading below the signal line still, but we don't have a cross back to the upside. So right now, I do kind of think that we are still leaning to a little bit more of a downside move. Now, I will say this, that there is a little bit of a bullish divergence going on the MACD. First of all, we can see that we created a nice low over here on the price action and a lower low over here on price action. But if we go into the MACD, we can see that we had a low over here on the MACD histogram, of course, and here a higher low on the MACD histogram. So that is bullish divergence, meaning that the price action is making lower lows, whereas the indicator is making higher lows, which is a bullish signal called bullish divergence. Now, in general, what I think is, especially if we have a candle close, or because we already had that candle close below that support level of $17.80 more or less, we could see more of a move to the downside in the next week or so. It's really difficult, of course, to state a very specific date to that, but I can imagine that in the next couple of trading days, we see a move a little bit more to the downside instead of the upside. Also, if you look at the RSI, the MACD, the stochastics, we are still below the levels. We are still below the EMA on the RSI. With regards to the MACD, we are still trading below that signal line. And yeah, I can definitely see a move happening to the downside. If we do actually go a little bit more to the downside, I would look at this level of about $14.30. That is the next major support in my opinion. I do think if it goes all the way there, if it does go to $14.30, I would personally see that as an opportunity, not just because of technical analysis, also because of the valuation of the company itself, of course. Now, we can, of course, always see a reversal earlier. It's definitely not necessarily moving towards that level of $14.30. We could see a reversal earlier, especially because of that MACD bullish divergence we were talking about a little bit earlier on. But I'd probably be waiting, if we do see a reversal, I'd probably look for a closure above the 8 daily exponential moving average, so a candlestick above this yellow line over here. If you're a little bit more conservative, I would maybe even wait for a candlestick above this level of about $20, like $19.80, to have a nice higher high instead of this high over here. But yeah, we definitely can see a little bit more of a downside. But again, if you see a move back to the upside, back above that 8 daily exponential moving average, if you see the RSI, for example, crossing back above the exponential moving average as well, if you see the MACD crossing above the signal line, that definitely could mean that the bottom is in, and that could be an opportunity for a longer term play if that would be the case. Now, if that actually does happen, if we do see that reversal coming in, then I would move, or I would target a move back to potentially even the level of about $24.30. which I believe is the next major resistance, not only because of this resistance level which was created by this high over here, this low over here, this low over here, but also because of the 55 exponential moving average, which is this white line over here, which is going to come in more or less at that same level of $24.30 in the next coming days, in the next coming weeks even. So I do think that that is going to be a major level of resistance if we do go back to the upside. Now, if you want just my opinion, I think that short term, maybe like the next week, maybe even the 2 weeks, we see potentially a little bit more of a downside move going on. I think I would be leaning towards downside in like 60 to 65% of the cases and 35 to 40% of the cases more to the upside. Longer term, I do think that in the next couple of months, maybe even the next month, just on that, we might be having a little bit more upside compared to downside, because I do think we are getting close to being oversold as we have been seeing in the indicator so far. Now, of course, do keep in mind that technical analysis is not going to work out in 100% of the cases. I do think that technical analysis is a very good tool to have in your toolbox, but it should definitely not be the only one. You should also look at valuations, fundamentals, of course. And if you want to know a little bit more about technical analysis, I'm actually going to be releasing a program soon about technical analysis for absolute beginners. If you would like to stay up to date to that and enjoy a little present when the course is actually launched, then you can opt in via this page, nisami.com/TA, and I'm going to keep you in the loop, and I'm probably going to launch this program in about 2 to 3 weeks time. So if you have any more questions about technical analysis with regards to Skillz, or if you have any feedback about these videos, always let me know in the comments below. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!